Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but if you're new or joining us for the first time, welcome. It's great to have you on board with us. We have to go over some housekeeping details about the session, and then we will get to the presentation from Mr. Rob Roy. So first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website at all times, so please feel free to take a look at it there in further detail, or feel free to take a screenshot of it now if you like, but that's the main point to take away from it. I'm going to leave this slide up on the screen just for review for when we get to the Q&A portion, keeping in mind that that portion is limited. We always have such great questions and we never have time to get through all of them. So just keep in mind that if we don't do your question, it has nothing to do with the validity, and to take that as encouragement to attend the insiders meeting when there's a 45-minute Q&A portion and a much higher likelihood of getting your question addressed there. So after hours today, we had earnings from Microsoft, Google, and AMD. All are lower. Is this the end of the rally? I'm curious to hear Rob's thoughts on tomorrow's trade and just overall market analysis, as I'm sure the rest of us out there listening are as well. So without further ado, Mr. Rob Roy.
Thanks, Zach. How are you?
Doing well, doing well. Happy to be back on this Tuesday evening.
Yep. Welcome, everyone, to TradeFinder Live. As you can see, I'm back in Florida in the Dragon capsule thawing out, where it's nice and warm in the 60s with bright sunshine today, as you'd expect from Florida. Not so sunny after hours, as Zach pointed out, with some of the big tech earnings. We'll get to some of those, I'm sure, as we go through the Q&A. Microsoft's down a little bit, but they kind of had a pretty solid earnings report. Not so good for Google and AMD. Both are down quite a bit in after hours. The futures on the Dow are up a little bit. Futures on the S&P are down a little bit. And as you would imagine, the futures on the NASDAQ are down quite a bit, about 0.8% right now. So seems like it would be a tough day in the NASDAQ tomorrow. But let's take a look at the chart, and I will go ahead and bring you over to the chart of the S&P, and you can see kind of a quiet day today. We also have the Fed announcement tomorrow, which nobody really thinks is going to mean anything, but there will be some curiosity if they lend any sort of credence towards a rate cut. I don't think they will. Why would they cut rates right now? We've got the economy doing well, at least on the latest numbers. And then we have inflation coming down and holding pretty close to the range that they want it to be at. So why would they cut? I think we need some weaker economic news. We also had consumer confidence, which came in pretty strong. So I just don't see where the catalyst is for the Fed to cut. And I think we can wipe away any chance of the Fed cutting in March. We'll have a lot more data by then. Maybe April or May, as it's being pushed out to. We have a little bit more information to see, and we'll know more then. But as far as the S&P, a nice update yesterday, kind of a quiet day today. We've gotten a tiny bit above the 10-day moving average. Now we are moving in this 45-degree range here, which is what you want. And the reason for that, if you're new, if you've been here before, you've heard me say this so many times, you want the market, whatever security you're trading, moving in a 45-degree angle. If it's moving to the upside, because the corrections are not as severe, the more vertical you go up, the more vertical you come back down. And if you go too vertical, then the entire move gets retraced. But so we are crawling to the upside here, but we'll see if the S&P can squeeze out a gain tomorrow. I'd be surprised based on how the reactions are to these earnings report after hours. If you weren't around on Monday, we have nearly 20% of the S&P reporting this week, so a lot more big stocks to go, but not what you were looking for today if you're a fan of the tech stocks or the Mag 7 or whatever. We'll see if we come back down towards that 10-day moving average tomorrow. We're still in a wave 3, which is going to be interesting when we look a little further here. especially with the case study consideration from last week. But the algorithm still likes the market at 500 at some point, but we still have the possibility of starting a wave 4 if you're new and not familiar with the software. It's from the Hub organization, hubb.com, where you can find out more about it. These are projections. This is telling you if the wave 4 were to start, this is where you could expect to find support, which makes a lot of sense to me because I've been talking about how I wish in January, when we had that small correction to start the year, we would have come all the way down to 460 then. I would have felt better about this move to the upside if that would have occurred. It didn't. The market doesn't really care what I think or what I would like. But we can continue to run in this wave 3 if we can get by tomorrow with some other strong earnings reports on the horizon and run up to 500 in the wave 3, then create the wave 4. These projections will move. Or if we start the wave 4 now, get by that, and then start looking for a rate cut down the road, perhaps, would be the catalyst to move higher if we indeed start a corrective mode. But that's all speculation based on what's going on. Again, the futures aren't down that bad on the S&P, just on the NASDAQ's the one taking the hit. So if we move over and look at the TNX, rates were down today, which would have been normally a really good thing, other than the fact that we had these negative reactions to the earnings reports after hours today. We look like we may be starting that wave 5 lower in rates as the market starts to anticipate the Fed cutting rates and lower rates to be seen at some point down the road. I think this wave 5 down here around 36 or so makes a lot of sense. We're right just below the 38% correction. It's not my favorite fib level. It's a decent one, but I prefer the 61.8 or even a 50% correction, so we could move back to the upside in rates tomorrow based on the fact that maybe the Fed isn't going to cut so soon. Or an alternative consideration would be if we're starting to see that these companies aren't doing very well and the earnings reports are coming in poorly, do we start to get some signals maybe from Amazon that the consumer is not spending? And that could be something that would put April, I don't think we go back to March, but maybe April on the table as far as a rate cut. And then we look for continued rate cuts, and that would likely drive interest rates lower. So it is interesting that we broke 41 today to see if we can continue this downward move. Looking at the VIX, a little bit of a blip up there yesterday, back down today. May get a little more volatility back in the market tomorrow with the earnings after hours. Futures on the VIX aren't doing a whole lot, but we'll see how that plays out. As you know, I'm not as much of a fan of this VIX as I was the older version when it was on the OEX instead of the SPX. Man, I just feel like it was so easy to predict the range. When it was on the OEX, they felt like they needed to make it harder. I don't know. It's just a conspiracy theory. But we have some room to go down on the VIX if the market wants to rally now, with the fact that we're back above 13, closed at 1331 today. And perhaps we could go a little bit lower, or perhaps we take out this wave 4 tomorrow with some more volatility spiking into the market. It just depends on how well the market can absorb these earnings from mostly Google and AMD. As I said, Microsoft came in pretty much in line. They're holding the line pretty well after hours, unlike Google and AMD. So let's take a look at the rest of the market. If we look at the Dow, as I said, the Dow futures are actually up right now. And you can see how we're breaking out of this range around 380 and moving to the upside, still in a wave 3 as well on the Dow. And perhaps that's some more market rotation. It looked like we were getting that at the end of last year. Then we went through some consolidation, a little bit of an expanding triangle here. Not a big one, but a little bit of one. And those yield breakouts, just like contracting triangles do, you just flip it the other way. An expanding triangle has the point on the left side and the mouth on the right, where the contracting triangles, the ones we're used to seeing, have the point on the left and the mouth on the right. But regardless, you look for the width of the mouth of the wedge, and that's about the expected move. Call it 370 to 380. So a 10-point move on the DIA. We're halfway there already, up at what we closed at 384.49, hit a high of 384.95, so 385, call it, on the high. That's half the move that was expected already out of the DIA. Can it carry the mantle while we go through this earnings season with the big tech stocks? That'll be interesting to see in tomorrow's trade. Can the Dow stay positive while the S&P is probably going to struggle a bit, but at least based on the futures, not nearly as bad as the NASDAQ is going to tomorrow. So we'll play that out. And then we look at the Qs, which have run up here into this wave 5. We talked about how there was a different labeling here, where the S&P is in a wave 3, the Dow is in a wave 3, but the Qs are in a wave 5. Now, the expectation was perhaps this 5 breaks out of this tap box range. Look how the algorithm just nailed this move on the Qs. A little bit of a vertical move here. Likely some of that gets retraced tomorrow unless something significant happens between now and the market opening tomorrow. And we would want to see this wave 3 high hold. So you'd want what that high was, 412.92, so 413, so 415, call it, is where you would like to see the NASDAQ hold. We'll see if it can do it. Or if it just falls apart tomorrow. We had gotten a little bit overbought because this move was a little vertical here. Then we had a little tiny consolidating triangle here. Looks like it's going to be a downside breakout tomorrow. So I think we're going to at least touch this 10-day moving average tomorrow, perhaps even a little bit lower. How well can the Qs hold up tomorrow? It's going to be really interesting to see. As I said, we still have a lot more earnings to go this week, so things could turn around in a short period of time. We start to see some more positive reports come out of the earnings. If you like the IWM for its nature of predicting risk on, risk off, there was actually some commentary about that today, the whole risk on thing. And we ticked down just a little bit, not too significantly. Was that a little foreteller of the market's not really too excited about taking a lot of risk? If we could get above 200 on the IWM, then we have a chance of running up and testing that 210 level. Remember back when we were between 190 and 210 was the range on the IWM, and then we went down and we were 170 to 190, even consolidated tighter than that. We're 170 to 180 for a bit. Then we went up to 190. Now we've broken above that level, tested it here in the middle of January, but can we hold it? And we'll see if that if the IWM has trouble tomorrow, if the Qs are struggling and the rest of the market struggles a bit. But we need to see that IWM back above 200 if you want to be bullish, in my opinion, on the Russell. Otherwise, perhaps we start to drift back down towards the 190 range and see if we can hold it. We did in January, as I said, but are we going to test that again? Maybe. As far as today, we stayed above the 10-day moving average. Will it tomorrow? I don't know. As Zach mentioned about the insiders meeting on Thursday night, we'll have a lot to talk about. We'll have the Fed announcement, and Powell's comments are going to be dissected. This is a 2-day meeting, so I'd imagine all the Fed governors are going to be out talking and getting their 15 minutes of fame. And so we'll hear a lot of commentary from voting members of the Fed, and perhaps they'll yield more commentary, insight as to whether or not the Fed is even thinking about cutting rates. I doubt we'll get that from Powell, but perhaps some of the other Fed governors who want their, their name in a headline may give us a little bit more information there, one way or the other. I mean, they could come out and say, no, we're not thinking about cutting rates at all. And I think Powell is going to give the Fed a bit of a victory lap and say everything is working exactly as they thought it would. And with, the economy still staying okay, and rates coming down, or inflation coming down, I think he's going to be kind of patting on the back type of thing. But I don't think that he's going to say, we're thinking about cutting rates. I think he's going to say, what we're doing worked well, and we're going to let this play out. That's my expectation. We'll see what Powell says, and then in the coming days, what the other Fed governors say. But as far as the IWM specifically, hard to picture going long there unless you break above 200. Now we are in a 5-wave Elliott wave pattern to the upside. The IWM is actually labeled a wave 4, and we've moved back to the upside. Now we came down close to a 50% correction. Remember, we can come down to 61.8 and still maintain the structure of the 5-wave pattern, but we had a really good test of the 50-day moving average. You wouldn't want to see that break down significantly tomorrow. And again, maybe it won't until we see some more of these earnings come out. And then we'll have a little bit more information, not just on the IWM, the Russell, but on the Qs, the S&P, and the Dow as well. We'll see how all of those play out. It's going to be really interesting. Looking at some of the foreign markets, looking at the EWA, we'll see what it does tomorrow as well. Made a nice move here off this wave 4, 48% correction, so right at 50%. We had talked about how we wanted the EWA to hold 23. Basically, it did. It came down and tested it, broke back above it. That looks pretty good. Close above the 10-day moving average, tapped it on the low. Can we continue to power higher? If we can get above 24 on the EWA, I think we have a great chance of going up and hitting that wave 5 target. But I think it's going to matter what happens in the US tomorrow, how these earnings get absorbed, and if the market uses it as a buying opportunity. I mean, if Google opens now, it traded down as low as 142.61 after hours. It's at 144.30 now, so it's going to be a rough day for Google. AMD is bad too, closing, and it traded above 175 in the trading day. It's at 160.90 now. So a big down day for AMD. Do people use that as a buying opportunity and step in and buy these lower opens if the futures hold into the open tomorrow, or these after hours trades hold into the open tomorrow? It will be very interesting to see if we get pullbacks and buying comes in, or if it's just stay away and there's even more of a drop when the actual market trades. I'll be watching for that as well. When we look at Canada with the EWC, nice move to the upside. I don't know if we'll have that tomorrow either. We were getting up into this area of 37. If we broke above 37 and that previous wave 3 high set at the end of December, I think we would have been good to go to run up to that wave 5. Can we get above 37 if the US market has a rough day tomorrow? Doubtful. It doesn't have to be that way, but this range here between 36 and 37 is really important on the EWC for our friends up north. You can see it's a pretty tight range with support at 36, resistance at 37. If we give up that 36 level, can we hold this wave 4 low? We've got a little bit of support here at 35, but if we break below 35, then you can see it's a whole different game, because we had this big run here in October, and if we break 35, there's not much support there, maybe at 33. So you want to see the EWC, that'd be quite a drop to come down towards 35, but if the US market gets weak, you want to see that 35 level hold. Now, all this could change with some other earnings reports, as I mentioned. It's just really getting started to the meat of the earnings reports, and perhaps we have some other big gains, big beats on earnings, and all this gets absorbed and we turn and head back to the upside. Anything is possible. It's just we're going with what we have right now, and it wasn't a good start with AMD and Google. I thought I would show Brazil. We get asked about that on the YouTube channel, the Elliott Wave options page. If you haven't gone there, I would imagine that you have, since you're here at TradeFinder, but if you haven't, go subscribe to the EWO channel, Elliott Wave Options on YouTube. We do that market update every week. You'll be notified immediately when the market update is posted. And we get some comments on, what about Latin America? Look at Brazil. So we had a pretty nice move here towards the end of the year, and then it's given it all up. And the concern here with the EWZ for Brazil is the fact that we are breaking below 33. Now, we did come down and fill this gap, and we got awfully close to the 61.8% fib level. So that was a strong area to try to bounce, but we couldn't get above 33 and hold it. There is some resistance at 34. Granted, we had all this consolidation through November and December. So you can see that there's a pretty good range there. A lot of bumping its head against those areas to get through it, but we filled the gap. And let's see if we can get back above 33 tomorrow. If not, we might be looking at least testing that wave 4 low, if not going slightly lower down to the 61.8% actual level. We got awfully close to it, but we didn't quite hit it. But 33 is key here. If you're watching this market, you want it back above that quickly. And if this is a false break above it and we're just going to kind of roll over, we could be looking all the way back down towards 30 through here. You can see how that was resistance back in May, and then we broke above it, hit 33, came back down. So we've been kind of ping-ponging between 30 and 33. Then we broke above it, consolidated nicely, tried to take off, but of course it went vertical, and that's why I don't like vertical moves. It went vertically up and then boom, right back down. So then we came up, filled the gap, and then headed back lower. So for Brazil, the EWZ, you need it back above 33 quickly. If we look at the 10-day moving average, you can see we're trading below not just the 10, but the 30 and 50-day moving averages. So if you're long this market or bullish on it, you need it back above 33 and back above those moving averages fairly quickly. Otherwise, yeah, 30 becomes in play. So this looks suspiciously like a test of that 33 level after breaking below it and then breaking above it and then coming back down. So we're testing it, and which way do we go? So as I said, if it breaks above 33, we still have resistance at 34. So we really need to get above 34 before you start getting excited about being long this market. Well, nothing excites the markets more than rate cuts. If we start to get some more really negative news to the point where it looks like, wow, this is really taking a chunk out of things, maybe the Fed starts thinking about it. I just don't think we're going to hear that out of the meeting tomorrow, the result of the 2-day meeting that started yesterday, or started today, and we'll get the news tomorrow. It's going to be really interesting to see what the Fed comes out with. Looking at the INDA, tried to break above that 50 level as resistance. If we could get above 50, above that wave 3 high, we're likely on our way up towards 51 or 52 there, that wave 5 target. We did label the wave 4, but only at the 23.6% fib level, which in my opinion is the weakest of all fib levels. It is a fib level, and it used it as support, and we've had a nice run on the INDA, but is that going to be enough, or do we need a bit more of a correction first? So this move down after testing 50 is not what you wanted. And you can kind of make this argument. I talk about this sometimes that my mentor would always say the third time is a charm. In other words, the third time you test a point of support, resistance, breakout, whatever happens then tends to continue for the short to medium term. So if this was the first attempt and then second and third, and we move lower, you might be looking for more to the downside. Doesn't have to happen on the INDA, but it's got to get back above 50 before you can get too excited about any further upside on the INDA. Maybe it just needs to consolidate through here. We built a little bit of support through here at 49, and maybe it can come down and hold that and then try to move higher. You don't want to see a break above below 49, below 49 on the INDA, because this was such a big run here that a break below that level, there's nothing to hold it. So there's no real, a little bit maybe at 47, but not a whole lot. So this range between 49 and 50 can be viewed constructively. If we can hold 49, retest that, and then turn around and get another run at 50, or try to get above 50 in the next couple of trading days. But a lot of people are commenting on how the INDA or the Nifty or whatever your favorite vehicle is for looking at the market in India is priced for perfection because of such a big run that we've had here. You all have seen this before, but that was a really big run starting on the lows in March. And then this big flat here with a complex C with a zigzag. We've highlighted that a few times, so I won't go back and do that again. But that's what you want. That's the kind of consolidation that you want after a big run like we had in the INDA, and then we took off again. But can we hold it, or are we going to give this back? We'll find out over the next week or two, I think, on the INDA if we can hold 49 and try to get back to the upside. Looking at the 10-day moving average, you can see we're still holding above that. That's a positive. And look where that 50-day moving average is at 48. We don't really want to come down and test that. It's possible. Markets test their 50-day moving average all the time, but we don't really want to see that because we come down here and we're getting into that void where we're starting to look at, gosh, if it does that, we could come all the way back down here towards 46 or so. And then a lot of people would say, see, told you. Or they can be wrong. And we can break above 50 and those talking heads cover their short positions, and that propels us up into that wave 5 area. This is one of the markets I'll really be watching closely over the next few days to see how that plays out. It's going to be really, really interesting. Looking at Bitcoin, had a nice move off 40,000, was up earlier. Bitcoin's down a bit. Zach, you'll be happy to know that Ethereum is still, at least at the time we started, was still holding green today. But Bitcoin has given back some of the gains, and it's just back under 43,000 a little bit, but that was a nice little bounce off 40,000. It bounced off the level that it needed to hold. So it came down here, looked precariously like it was going to break below that 50-day moving average significantly. We have a lot of congestion in here with this move to the upside between 34,000 and 40,000. So we came down, we tested 40 and held it. If we're going to have our rally into the halving that starts at on April 18th is the expected date, then this rally should hold. Maybe a little bit of sideways consolidation following the last couple of trading days, and then we take off again. If we can get above 44,000, because that was resistance back there in November and December, we tried to break above it once. No follow-through day there. Big up day on the 8th, but right back down. And I know trades 24/7. I understand all that, but we do get the end of day print so that we can look at charts like this. And now we're back up testing that resistance at 44,000. So it tried to make it as support, but it couldn't make a significant break. So back down we came. We held at 40,000. We're trying 44,000 again. If we can break above 44,000, then we may be off to the races on Bitcoin, but it's got to do it first. It's the whole Missouri thing. Show me. You have to actually do it. We can't
just to add some context there, Rob, we're currently at 42.8 with Bitcoin, and Ethereum still holding 23, as you mentioned. So as we're aware, it's an end of day chart there, but just wanted to give you the live update for those.
Yep. Sounds good. Appreciate the information. And you know, if you've got Ethereum holding in there well and just a little bit, maybe it was just a resistance level on Bitcoin, and that's all it is, and nothing more than that. We stay above, we're above the 10, 30, and 50-day moving averages. But if you're long Bitcoin and you want to see that run happen, you just want to break above 44,000 with a follow-through day. And if you get it, then I don't know what stops it at that point in time. So if we get above 44,000 with follow-through, then we could be off and running. And as you know, we look at Coinbase right along with Bitcoin, a little bit of a pullback there today. And you can see that we are really testing the 10 and 50-day moving averages. By the way, the 10-day moving average is this lime green line. A heck of a move on Coinbase. And then we come back down where a lot of people thought with all the new Bitcoin ETFs coming out. I got some information that behind the scenes, the unwinding of the whole FTX thing, which I thought was over, and I was told, no, it's not. They had to unwind billions of dollars with a B of Bitcoin positions. That could have played into what happened with Bitcoin and also with Coinbase. But the expectation is perhaps people are utilizing the ETFs and not trading on Coinbase anymore, and that could be a negative there. But for now, at least for now, and this could all change in the next couple of days, but for now, we came down and held 120, which you needed to hold. We're right there at the 61.8% fib level. So we had support. We had a good, strong fib level. We've got a wave 4 labeled. If Coinbase can mount a move, then it has a well-structured five-way 5-wave pattern. But we got to get back above these moving averages here, and the fuchsia colored line, there's the 30-day moving average. I don't view that so much for support resistance, but I view the cross between the 10 and the 30-day moving averages as weight. Old floor traders taught me that, that's what they look at as far as whether or not you're going to have an impending trend, because it's a little quicker than the 50-day moving average. Normally, the 50-day moving average is what people look at. 10-day moving average for short term, 50-day moving average for trending. But the crosses between the 10 and 30 are viewed with some significance on the floor. And right now we have a negative break. We have the 10-day moving below the 30-day, but we were able to hold 120. If we can right the ship here and head back up and get that 10-day moving average to cross back above the 30-day, the fuchsia colored line, then no harm, no foul. And that's basically at 140. So right now, if you're wanting to trade Coinbase, I think it's a wait and see. It would get real interesting if we could break above 140 with a follow-through day. I think you could easily look long there. But if we break below 120 with follow-through, then it is we could see 80 again on Coinbase. So this trading range here between 120 and 140 is the important levels to watch on Coinbase. I think right now you just keep an eye on it. I don't know how you would place a trade if you're already long Coinbase. I think you stay long unless it breaks below 120. If you're looking for an entry to go long and say, I'd like to take advantage of this pullback, I still think you want to see it above 140 first. I oftentimes give, well, if you're aggressive, because we all have different risk tolerances, if you're aggressive minded, you could do this. If you're more conservative, you'd wait on this. But I think whether you're aggressive or conservative, the important thing to do here, the prudent thing to do, is watch this range between 120 and 40 and then step in when there's a break either way. Either a break above 140, you go long, a break below 120, you go short. But right now, you just watch and see how it plays out. I think it's just kind of a guess at this point in time if you wanted to put a trade on now with that range. So that's what I'll be watching on Coinbase. All right, so as we take a look at our previous case study considerations that we've done here on TradeFinder, and if you're new to TradeFinder, I invite you to go back and look at some of the recordings. We've had a pretty heck of a good run over the years on the case study considerations that we've identified here on TradeFinder, and you can go back and look at them. You can see what we talked about during the actual shows and then how they turned out. So I invite you to do that. If you have some free time, go back and look through those. But if we come back here, we looked at NVO, which, by the way, reports earnings before the market opens tomorrow. As you can see, we are not labeled in a 5-wave pattern. We had a pretty decent update today, and we are up after hours. It's trading at 110 right now, and it is a foreign company. So have they reported earnings already? We're going to get them before the market opens tomorrow. Or is this just some short covering in anticipation of a good earnings report? We'll find out. But the key level here to hold is 105. So if it comes out and is received negatively, you want to see 105 hold. As I said, right now, at this point in time, we're at 110. But things could change if we get a different outcome with the earnings before the market opens tomorrow. But a break above, it doesn't even have to get to 110, just a break above this high at 109 at this point in time would be pretty bullish for NVO. So I think we keep an eye on this one. We did send this out as an alert, and so we've been holding it. We also, as you may be aware, if you've been watching, had Google on the 16th, and this is what the chart looked like on the 16th. And then we had a pretty nice little run here. Now, we sent this out as an alert to our alert subscribers at ewotrader.com as well. And there it is. There's the alert that we sent out on Google. It was the 16th when we looked at it. You can see we sent the alert out to our alert subscribers on the 18th. So that was the entry point here based on this big ascending triangle that we saw on Google. And it was expecting a move. So we had what, 125 to 140. So that's a 15-point mouth. So you're looking at a target price around 155, and we hit it. And so the exit, once we got up, you can see we ran right up to 155. That was our target. If you didn't take that off, you probably are getting a little greedy with that move. Separation from the 10-day moving average, the vertical move. I don't like either one of those. As you know, I don't like it when it goes vertically. It's nice when you're in a trade because you get an infusion of implied volatility. So it adds to the value of the calls, and it worked out really nicely on this alert. As you can see, we made almost 100% in 6 days. We're going to take that every time, even though it still went a little higher after we got out. But you get close to 100% in less than a week. Yeah, you're getting pretty greedy. If you wanted to stay in there a little bit longer. So now, obviously, we're going to have a problem with Google tomorrow, but we were already out. And that's one of the beauties of the alert service. And that's the difference of the alert service at ewotrader.com versus the case study considerations that we talk about here at TradeFinder. So we identified Google. Did you get out? Or are you going to be mad at yourself tomorrow that you didn't get out before the earnings report? We did. Here's the proof. And so the alert service at ewotrader.com, we send you out alerts via email and text messages on entries, any adjustments, and exits. So if you were following along with the alerts, you're already out. If you weren't, then you're probably not going to be so happy tomorrow. So we exited on the 25th. And then there's the mark-to-market graph, which shows you the progression each and every day. And then, obviously when the stock started to go vertically, so did the return. We had the April 155 calls. We started out of the money. We went to at the money. That's the best case scenario when that happens because you get great acceleration of delta and gamma. Those are the things that we look for when we're placing our option trades, trying to figure out, which strike to buy. We're looking at that delta, and the acceleration of delta is gamma. So we take those things into account, and we had a really, really nice trade. So I hope if you follow this one that you're out because we are not going to be looking at 155 tomorrow, at least not based on where it's trading right now. So we're going to be down at 144 if we open with where we're trading when the after hours session calm down. So that would be back down in here. Perhaps we're testing the wave 5 high is what occurs, and that will likely label the wave 4. So perhaps there's a new entry on Google. We'll be keeping an eye on that. As you probably know, if you've been watching, Google's my favorite stock via Elliott Wave, and I've had more trades through Elliott Wave on Google than any other individual stock. Lots of stocks have great Elliott Wave patterns, but Google, Elliott Wave just seems to nail Google, and had great success, a lot of success on trading Google through the Elliott Wave patterns. But with this kind of vertical move up, we had consolidated into the earnings report, and we're going to give some back tomorrow. It's just how much are we going to give back? The 10-day moving average is down at 150. Perhaps we hold that. Maybe we get some buying that comes in before the market tomorrow on these lower prices. We'll see. Google's a good company. It's doing really well, fundamentally sound. Maybe we can hold 150 or maybe not, but a lot of time between now and when the market opens tomorrow. But at least at this point in time, it looks like it might be a rough morning for Google. Into it, we looked at last week. Now look at this chart because this is good. So we're going to cross off Google as a winner because we did. We put our money where our mouth is. We sent it out as an alert. We've closed it. I just showed you that. So that's factual. So that one's off the chart. So that just leaves, we'll see how NVO reacts with its earnings in the morning. And then we had into it last week. Now we had a target as high as 680 in this wave 3, but watch what's happened with into it since then. It relabeled to a wave 5. So that happened yesterday. And we touched that tap box on the high yesterday. When you see that relabeling, that changes everything. So it was a wave 3 a week ago, but when it relabels, and we touch the tap box, what can you expect out of it? What more do you want? It hit the target range that was expected from the lower line to the upper line was the range. So yesterday, when it touched that high, would have been your exit. We did not send this out as an alert to our alert subscribers, but had we done that, then yesterday on the high would have been the exit. So I'm going to cross that one off, even though we didn't hit 680. So you're wondering, well, why would you take it off before you hit your target price? And this is the reason. The chart relabeled. You have to take that into account. It's not the same information that we had when we sent it out. So you have a wave 5 that's hit its wave 5 projection. That's your exit. So that one, I think, hopefully you get another shot tomorrow if you're following this one and you're still in it. But 680 is still possible because it's within the range of this tap box. We were looking at it from the zigzag pattern, but with this wave 5 here, it could still go up, and maybe it does go up and hit 680, and you look back and say, yeah, you got out too soon. Well, I would rather say, hey, I had a nice trade and made a nice gain, rather than, gosh, I wish it would have stayed longer and made a little bit more when you have a relabeling like this. So that's the information there. So that leaves the only what would be considered open case study consideration on NVO. And if what's occurring after the market holds into the open, that probably comes off tomorrow too. But we'll watch that and see how that plays out. So we're posting the close of Intuit and Alphabet based on those target prices that were hit. And even if Intuit continues up, which it may very well do, it got a little bit above its 10-day moving average. So if you're still in it, it doesn't necessarily mean, gosh, I screwed up, I should have gotten out. But you certainly had information to get out, because as soon as it touched that high, it gave some back today. And that's what ended up happening there. So pretty good results on our case study considerations. We'll see what NVO does tomorrow when we see how the market reacts to its earnings report. Again, I don't know if there's whispering coming out overseas or whatever, since it's an international company, NVO, but it sure took off at, let's see what time so right about 7 p.m. Eastern time, it just went vertically up. It was going sideways after our market closed, and then at 7 p.m. it took off. So I don't know exactly what the time frame is there, and if they've already gotten some information on the earnings or what, or maybe it was just some information leaked out, because we know that never happens, right? There's never any information leaks out of the markets. Obviously, I'm being facetious there. So let's see what we can find for case study considerations for tonight. As we look at the search results, we'll see that, wow, there's 9. That blows me away. There's 9 results there. Look, NVO is still on the list. How about that? I hope that's a positive indication of tomorrow. CDW is one that we have for our alert subscribers. We have an alert on CDW. That's the 3rd time it's shown up on the list. So the behind the scenes, look, some of y'all are going to like this. Super Micro. Ooh, that's a volatile stock. Let's just take a look and see where we are right now on good old SMCI. You can see that we had this big, huge vertical move, and then we went sideways. I was waiting for a bit more of a pullback. I really wanted to get into this one after that move, but it just didn't give us a chance. It took that move and just kind of consolidated a little bit and took off. And then we got on the high of the day, way above the 10-day moving average. So we were overbought. We came back down. You can see there's solid volume behind it. That all looks good. And the CCI has a little bit of room. And then the DMI is starting to get to the point where it's saying, hey, this has been a heck of a move, but the strongest part is over. But look at that positive directional indicator still going up and the negative going down. The shorts don't want to touch this right now, so the buyers are in control. But man, I would like to see this pull back just a little bit more. Maybe it will tomorrow with the move down. But earnings report on SMCI was pretty well received, as you can see, but it just got too far away from the 10-day moving average. So, at least now with the earnings report and this pullback, some of that implied volatility will come out. That would have been a bold move after this huge move up here to have held that into earnings. If you did, kudos to you. But wow, that's an iron stomach to do that after that kind of move. And I was a little concerned that maybe on the earnings it may pull back. Well, I wasn't concerned. I was actually hopeful that we would get a little bit of a pullback and that could be the entry. It didn't happen that way. But to go long this now, I just feel like you're chasing now. Let's see if we pull back. Even if we get into this range here, I'd love to see around 460, which was where we were before the earnings, right in through there. And that could be a really good entry for it. The search likes it. It's on the search, as you could see. But I just want to see if we can't get just a little more pullback first. We may miss that one. I may miss that one. Maybe you guys didn't, but I may miss that one because I was waiting on it before. Probably wouldn't have gotten in before earnings anyway after that move without a pullback. But then we have Aflac. We got Principal Financial Group, Globe Life. So you're seeing some insurers in here, kind of giving you an idea why the Dow's doing well. CDW we already have for our alert subscribers, and we can look at the chart and see if there might still be a good entry here. You can see it's crawling nicely to the upside. The DMI is starting to set up and form well. Nice move to the upside on the positive and downside on the negative. Directional indicators, good solid volume. That's what you want. You don't want these big spikes here. You want just good consistent volume. That means the stock's under accumulation and it's not just like a massive short covering that's going to die right away. But man, if we could just get above this 230 level and hold it, we kind of got a little bit above it today. It's got earnings coming up. Let's see, when are the earnings on CDW? On February 7th is the earnings report for CDW. And maybe it runs into the earnings report and then you take it off, or maybe it kind of consolidates into the earnings report. I'd love to see a little bit more movement, get some implied volatility in the calls prior to the earnings, and then probably take it off before the earnings report. But that 230 level is acting as some resistance. Maybe we just jump ahead of it. We'll see how it trades over the next couple of trading days. But again, the 7th is the earnings report date on CDW. So I don't think we want to do that one now. So let's go back and look at some of these insurers. They were likely seeing some market rotation with the performance on the Dow. You saw the chart of the Dow, and Aflac moving nicely. I don't know about that DMI. I don't know if that's well formed enough yet. Let's take a look at it. Not really. I want to see this ADX above 20. So I don't think Aflac is a candidate. Global Life, they're ones that you always get in for putting insurance on your kids and stuff. They talk about that a lot. That doesn't look too bad. Let's see what the DMI looks there. Volume also there. So we had this big run. Then we had a 42, so call it the 38% fib level. We're moving up again. Gosh, we're right here at resistance though, at that 125 level. So this one, I think you want to see it beat that. You want to break above 125. Let this ADX turn back up. It's still right at 20, but I want to see it break up above 20. And these two directional indicators continue their current path, the positive up and the negative down. But it's just too close to resistance. So I'd want to see a break above 125. But that's an area of the market that does seem like we're starting to get. We had some good news or some good moves in the financials today. JP Morgan had a nice move. So perhaps Principal Financial Group. Take a look there, and also had a big run. Just a really good sideways consolidation. We haven't filled that gap up there yet, which is interesting. So we have this gap ahead right through there at call it 83. What was the low of that bar? Yeah, so 83. It's not much of a move, but it does seem like it wants to go up there. Nice move to the upside today. So let's do that. Let's make for today. PFG is the symbol, and we're not looking for a big move here. I usually like a little more of a move like that, closer to a 10% move out of the stock, but up to 84 and fill that gap and see if that works out. So that'll be our official case study consideration for tonight. Principal Financial Group moving up, fill that gap from July and test that 84 level. We'll see how that plays out throughout the rest of the week. So with that, well, I finished early a few times, Zach, but I ran a little bit long with the commentary tonight, but lots to talk about with the earnings after hours. So let's get in as many questions as we can with what time we have left.
Absolutely, sounds great. Yeah, I think that was some very valuable content, so no worries there. Let's go over to SoFi. That seems to be one of interest and demand at the moment.
Yeah, it normally is, and I figured we would be hearing about it with their earnings report, et cetera. So let's see what the chart looks like. Taking some of the other ones off so I don't have too many on here. I think that was their earnings report right there where it bounced up. Yep. So nice move. Sure looks like it wants to at least test 10. Just got a little bit ahead of itself there with the big move on earnings and coming back a little bit. As long as it holds 8, I think you can be long SoFi. You really want to see it break above 10. If it broke above 10, we're probably testing that high from July up towards 12. So this would be one where you have both a conservative and an aggressive move. I think an aggressive move is you're happy with this pullback following earnings. It did go up and fill this gap here, and see if we don't hold here and turn and move back up. So as long as it stays above 8, I think you're long. You're looking for a move up to 10 and possibly 12 if it can break above 10. But you can see there's some resistance there at 10. But based on good result from their earnings, et cetera, maybe that gets some more institutions involved. Remember that the $5 and $10 levels are important. If you want to trade single-digit stocks, you have to have aggressive growth as your investment objective. But if you can get into double digits, then the growth and income, those funds and institutions with just a growth investment objective can acquire those. And that might become interesting if it can get above 10. But I think you could get a run up to 10 here, but your out is definitely 8. If it breaks below 8, then all bets are off. You take it off.
Very well. Let's go over to GLD. What's going on with the metals?
Well, we're trying to catch a bid. You can see we have a really nice triangle. We sent out a strangle on this to our alert subscribers and take the moving averages off. You can see this triangle here. Now, it looked like we were breaking to the upside there yesterday, and we opened higher today. So it looked like, hey, we're off and running, and then it came back down. So on these triangles, you get breakouts one of 3 ways. It either just takes off and runs, or it goes in a 45-degree angle, so it just kind of breaks out and meanders up, which is the ideal scenario, or it breaks out and tests the breakout. Now, sometimes you can get a false breakout, and it gives you a head fake, and then the big move is to the downside. That's still in play here on GLD. Or it could just be we broke out, and then we're back testing the breakout, and then we turn and go higher from here. And it may be waiting to see what the whole result is from the Fed's announcements tomorrow and the future view on interest rates, et cetera. That could play into what happens on GLD, but it looks like GLD wants to move. Does it continue the upward breakout? Is that a false breakout? That's what we'll be watching over the next couple of trading days. But so far, it looks like It wants to try to break higher. But with a triangle, we don't really care. So if it's a false breakout and breaks lower, that's fine too.
Absolutely. That's the beauty of that strategy. Let's check out CWCO.
CWCO, Consolidated Water. Gosh, I don't look at this one very often. Um, I like it. That's one of the things that's fun about TradeFinder is sometimes y'all come up with some symbols and I don't watch that often. All right, so this is one that this is pretty easy. If you want to be long this stock, you're right there. As long as it stays above 32, you can be long. But if it breaks below 32, then you're out. Or you start looking for a potential downward move. It had a triangle here, just like what we just looked at in GLD. It broke to the upside out of the triangle. And the way the rules work on Elliott Wave corrective triangles, you come back and test the breakout. So see how this one broke up, came back and tested it, and then took off. Does GL do that? It might. Our GLD, it may do that. But again, I think that pullback today may have been more of let's wait and see if the Fed gives us any sort of hint on rates. But again, you got the wave 3 high, you got support at 32. If you want to be long, as long as it stays above 32 without a break and a follow-through day, you can be long in this stock. Yeah. Break below that, then you have to see how it handles 30 and go from there.
Very well. We got a question from Shane here. USO looks like it hit a wave C 100% in the wave 4. What are the odds of wave 4 over and wave 5 beginning? Problem is ADX is wrong way around to wave 5 starting. Appreciate a comment.
All right, so here's USO, and we did catch a little bit of a bid here in oil. And as I mentioned in our live show yesterday, Zach, that when I drove home, drove all night Sunday night, I was blown away at how many cars were on the road. I like to drive at night. It's quiet, I get to think, and there's usually not a lot of traffic. It wasn't like that Sunday night. Sunday night, there was a lot of traffic. So if the consumer stays in there, based on what we're getting so far from the GDP, that the economy is still going good, we could get some follow through here on USO and disqualify this pattern. But right now, it's still a well-structured 5-wave to the downside pattern. And if the economy does weaken and the consumer weakens and we stop traveling, then this could be nothing more than a wave 4, and then we head back to the downside. So there's a little bit of danger here on USO. It feels like it wants to go to 75. That would get us right about the 61.8% wave 4 correction. So that wouldn't disqualify the 5-wave to the downside pattern. There's resistance at 75. Again, it would be that strong fib level. So approach this with caution. Let's see what it does, if indeed it does get to 75, and how it handles that. Looking at the DMI, it's trying. It's not there yet, but we've got step 1, or step 1 and 2, which is the ADX moving up and moving up above the negative directional indicator. We've got good separation between the two directional indicators, but we need that ADX to get above 20. If we do, that would give us some information that we likely break above 75 and this 5-wave pattern becomes disqualified. But our long-term subscribers know that the reason that 20 is there is because oftentimes we'll see this, it'll look like it's only a matter of time before it breaks higher and continues above 20, and it looks like that, and then it gets to 20 and then just rolls over. That's still in play too, especially with this 5-wave pattern. So not a clear-cut picture on USO, but it just seems like we get a little bit more follow-through out of it to 75, and then we see from there.
Alrighty, very well. Let's check out AMD. Good old AMD.
Well, that's going to be a whole different chart than what you're going to see tomorrow.
Yep.
Right now, it's at 160.90, as I said. So we're down quite a bit. If it holds that, it'll open right here tomorrow. And so could be the start of the wave 4. And, you kind of got a signal here with this ADX. It was so high and starting to roll over already. And the negative directional indicator was coming up. So a lot of people bailed in front of this earnings report today. And they're going to turn out to be quite smart, at least if where it is right now holds into the open tomorrow. But that was a big run in the wave 3. The wave 5 got above 50, which is really high. Getting above 40 tells you the strongest part of the move is over. It was already starting to curl over. So it was giving some warning signs, the DMI was, of what was to come on this earnings report. And I would submit to you that I doubt it holds at 161. So that's where there's a little bit of support down here around, gosh, I know you don't want to hear this, but it's down around 150 is where the support area is. Another one that we had and got out of it too soon, but now you look back and you can't pick perfect bottoms and perfect tops. You take your gains and you're happy and you go. But it's hard to imagine at this point in time that it stops before it gets to 150. Maybe it does, but we'll see over the next few trading days.
Alrighty, I see we are a minute after the hour. Do you got time for maybe one or two more?
Yeah, let's do two more real quick because I babbled on a bit and then we'll send everybody on their way.
No worries. Let's go back to some Bitcoin ETFs that you talked about a bit earlier. Let's look at CLSK.
Okay. Some of these stocks that follow it, I'm not as familiar with as you are. But gosh, we filled the gap. We're 70%. That's danger zone, according to Mr. Elliott himself, but it held where it needed to, right there around 7. That's where it had to hold, and it did. Otherwise, we were coming down here to 5 or below. So far, so good. But that's your key. If it breaks below, I mean, you could even raise that line up. Nah, you don't want to go that high. So 7, what's 7 is your key. You want it to hold these lows here. It is above the 10-day moving average. It's trying to give you a positive cross here. This is what you want. When you get a negative cross on the 1030, you want it to correct that pretty quickly. And it's trying to do that. So as long as it stays above 7, I think you're long here, and you could have a nice run. But a break below 7 and you got to exit. So as long as it holds 7, stay long. If it breaks below it, you got to go. So one more.
Thank you very much for another phenomenal presentation, and we will wrap things up here. I just want to remind everyone who's watching live to give that like button a smash for Rob. It goes a long way for the algorithm and everything along those lines, so we greatly appreciate it. We'll wrap up this session with MARA.
MARA. Another one. So we got some Bitcoin stuff going on again, huh? Now this is another easy one. The DMI is trying to reset up, but man, it got really high on that vertical move. And once again, Zach, examples of why I don't like vertical moves, because what goes vertically up, what happens?
Often comes vertically back down.
Yep, which is exactly what, and this is why I don't like them. And we show example after example. So on this, the resistance level is at 20. So I would be a little more inclined to say, let's let it's testing the 50-day moving average. Let's let it show us it can get back above 20. Clearly, it's got plenty of room because it made that run to 30. If you can get above 20 with follow through, then we're probably off and running on that wave 5, but it needs to do that. So you want it above 20 with a follow through day, confirmation day, and then I think you got a good one there. But right now, it's too dangerous because it's bumping its head against resistance. But if Bitcoin's going to do what it normally does and everything follows along with it, then it should break back above 20 and you can feel more comfortable there. Thanks everybody as always for watching. Thanks, Zach. Great job. I know you have 18 things going on behind the scenes and then still try to feed the questions as well. So good on you once again. And we do appreciate everybody's time very much. Extremely passionate about that. Time's so valuable to us all. And we appreciate when you spend it with us, and we do our best to make it an informative and educational use of your time. So thanks. Lots more to come the rest of this week. Busy week. We'll see what Powell says tomorrow. And, it could be a fun day tomorrow or it could be a dud day. We'll see. But it's not going to be a dud day in the NASDAQ. That's for sure.